Introducing Jay Leek, managing partner and co-founder of SYN Ventures. How are you, mate?
Excellent. Thanks for having me.
Good stuff. When did you get in?
Yesterday morning, but it feels like last week already. You know how Vegas is. So.
Yeah. Well, nice fresh face now. I think at the end of the conference, we should do a before and after photo and see how.
See me on Friday morning. You'll see what happens.
Yeah. Where's home for you?
I split my time between West Palm Beach and Manhattan, or also known as Southern New York and Manhattan.
Yeah, absolutely. We flew in late last night, so as I say, we're kicking off with a bang. You're the first podcast for the conference, so we're excited about that. So right. Great to have you on. Did a bit of a fun fact check about you, and I heard you like wine.
Yeah, my wife and I, we collect wine, so it's like that's our hobby, like travel, visit some wineries, have an interesting collection. Yeah. You'll never drink bad wine if you're with us.
I feel like I should be presenting you with a bottle of wine right now, but
8 o'clock in the morning might be a little too early. But I got my limits. I mean, maybe at 9, but no, just kidding.
Brilliant. Well, look, Jay, with all my guests, I like to take it right back to where it all began and how you got into the industry, man.
Yeah, no, I grew up in a family-owned business where I built computers, installed, Novell servers and all kinds of crazy things like that. And somehow that stumbled into going to work for Checkpoint. And then I ran security at Nokia for about 10 years and Equifax, and found myself being the first CISO in private equity, or I was CISO for Blackstone. And, and that's 18 years blink, basically right there, so.
You don't look old enough.
Yeah, older than I look. So.
Yeah. So when was your first CISO role?
Well, I wasn't technically the CISO at Nokia, but I ran corporate IT security globally for Nokia. I was there for 10 years, and I took over that role in 2005 or 2006.
Yeah.
So it's kind of closest thing to a CISO, I think, at the time.
Yeah.
If you really want to get to pure titles, 2012 is whenever I joined Blackstone as their CISO. I was the international security officer before that for Equifax, so kind of in between.
Yeah,
so,
nice. Yeah. Okay. Yeah. So we're probably a decade on now, but at that point, what were some of the biggest challenges for you as a CISO at that point?
It was a developing role. I had the very fortunate benefit, though, to have the best support. This is before the Target breach, when everybody kind of had lights went on, and after that, kind of became the trendy thing to announce your breach, and you would get support or whatever. I had the most fantastic support from the Blackstone management from before I started, actually, and then in the interview process continuing on. So I'd say management support was never an issue. It was wrapping your head around the complexity of the issues and kind of what was important and what wasn't important, and whittling it down to the things that matter most, really, so that you didn't light too many fires. And think that the world is falling, whenever you're working with your management team and all that stuff. So I'm always this simple-minded guy that likes to shrink problems down to things that I can manage and I can hold, and I think that's something that I always struggled. There's this you remember when 20 years ago when it was trendy, to put these taglines at the bottom of your email, right?
Yeah.
So there was a guy at the time, was at Nokia. This was literally over 20 years ago now. And this guy from Fujitsu, I won't name his name, but he'll know who he is if he sees this podcast. He had this line at the bottom, this tagline at the bottom of his email. It said, "Without security, there'd be no business. Without business, there'd be no need for security. We must find the medium."
Yeah.
Right? And I asked him if I could steal that tagline. He said, "I've had it for 2 years now." So I've always, my entire career ever since then, I've been always striving to find the medium.
Yeah.
Actually. So.
Brilliant. When did your transition from security operator to investor happen?
Yeah, so I had the very fortunate benefit at Blackstone of not just being a CISO, but I led the early stage cybersecurity investing off the balance sheet. Okay. And I worked with private equity on LBOs also in cybersecurity. So did my first seed investment in Carbon Black in 2012, just a few months after I joined the firm.
Yeah.
And so, been investing ever since, actually. So it's crazy. Yeah, 2012. So over 12 years ago, I've lost track. 75, 80 investments later now. Here I am.
Wow, I think Carbon Black's a nice success story to start with. Wow.
Yeah, it wasn't a bad place to start with your first seed investment.
Yeah, absolutely. So when did SYN Ventures, when did you decide that you were going to just sort of co-found and go for it? And how did you meet Patrick?
Yeah, so I left Blackstone at the end of 2016, and I went and co-founded my first fund with someone else called Clear Sky Security. So, and Patrick was part of the founding team with me. So, but within 90 days after starting Clear Sky Security, Patrick had joined us. However, I first met Patrick back in 2014. So one of the investments that I led actually with Clear Sky in their first fund before they had a security fund. I co-led the pre-product, pre-revenue, and pre-product round, B round into Silence. And so that was in February of 2014. And whenever I joined the board of Silence, Patrick was the lead independent director at the time on the board of Silence. And so we kind of like got together as like the two CISOs in the room, you know, with a bunch of investors, you know what I mean? And ever since then, we kind of, you know, we just started collaborating on a bunch of stuff. And when I decided to co-found the Clear Sky Security Fund, I asked Patrick if he wanted to come and join me in this crazy venture. And, you know, he did, like I said, 90 days later. And then in Q2 of 21, instead of raising a second Clear Sky Security Fund, Patrick and I decided to start SYN Ventures together.
Brilliant.
Yeah.
Can you tell us a bit more about SYN Ventures then?
Yeah. So, you know, it started off as in 2017 when we were raising Clear Sky Security, and also like in 2021 when we were raising SYN Ventures. Our punchline was, we're the only two former Fortune 500 CISOs, full-time in a venture partnership that comes with CISO connectivity, you know, all this kind of stuff. And it was this CISO story, right? And that was a very powerful message, and allowed us to raise capital in a very fast and efficient way and attract great opportunities. Since then, we've developed the story out, though, to we are a team of operators with over 350 years of operational experience as former Fortune 500 CISOs or CEOs, CTOs, or founders of multi-billion-dollar security companies turned investors over the last decade plus. So we've evolved that messaging. All of my partners are exactly that. We're all operators, all CISOs, CEOs, CTOs, or founders of multi-billion-dollar security companies, you know, all ran something for between 20 and 30 years each, right? Turned investors over the last, you know, 5, 10, 15 years, depending on who you're talking to in my team. And so that's what's massively differentiated about SYN Ventures. We now have two different strategies, actually, that we're actively investing out of. So traditionally, we had what we now call our flagship fund. And our flagship fund was kind of mostly Series A focused. It would do a little bit of later stage. It would do a little bit of seed. But we predominantly focus on Series A. We still have that, but now that fund is almost exclusively focused on Series A. I call it A- to A+. That's the focus. That's a $300 million vehicle that we're currently investing out of. And then last year, we launched a $100 million dedicated cyber seed fund. So we're now the largest dedicated cyber seed fund in the US, which is fascinating because if you go to Israel, there's like 5 over 100 million, and we're the only one, you know. But we have a dedicated cyber seed fund where, you know, it's 2 people in a physical virtual garage or a room, I don't care, you know, with an idea, and we help them bring the idea to life, basically. And so the 2 funds are mutually exclusive, but yet they can feed each other too, but they don't have to. They're also independent.
How many companies have you invested in at SYN Ventures so far, across the 2?
Yeah, across the 2, it's a great question. I think we just invested in 26 and soon to be 27 here in the next week or so in investments. Yeah,
brilliant. Yeah, because I saw your Q2 LinkedIn post, and I think you said you had looked at like over 100 security seed stage or earlier than that companies. Is that right? Yeah.
So like we will meet between 450 and 550 security companies every year. We have since 2017 or 18 that we never met before. And we invested about 1.5% of them on average. So yeah, it's we meet a lot of companies, and we're very fortunate. That network I told you of CISO, CTO, CEOs, it's all inbound. We don't do any really outbound outreach. And you know, because over the last decade or so, we've invested in over 70 security companies. We've had 27 exits in the last 5 years or so. There's a lot of an ecosystem. You know? Out of the 26 investments that we've made so far, 11 of the CEOs we backed before, once if not twice in the last decade. either as a founder or as a C-level executive in one of the companies that we've invested in. So we have people that want to keep coming back for the pain for some reason. You know?
The pain. Yeah. What about, I guess it's the money question. Like, what is it that you look for when you're looking at these companies? Because they're so early on.
Yeah. No, so we think about the 3 T's in investing. I feel like a Silicon Valley episode, okay? You know, something. But yeah, no, it's the 3 T's. It's team, TAM, and technology. So your total available market, you know, for people who might not understand what that is. So I can't tell you what slot number 2 and 3 is, but I can tell you what slot number 1 is. By far, it's team.
Yeah.
We're investing in team, right? So a good team, when they run into problems, they don't hit a wall and burn venture dollars. They hit a wall and figure out how to crawl under it, jump over it, break it down, walk around it, run around it, you know, climb over it, whatever it is that they need to do, basically, you know, and that's an iterate, fail, pivot, do whatever, succeed, basically. And so team first and foremost is what we're investing in. You have to have good technology. The TAM has to be there, but a good team will figure out how to solve the tech problem. They can't solve the TAM problem. So we'll never invest in something that doesn't have a need. You know, there's no economic buyer that's willing to pay for it. You know, that goes without saying. But I can't tell you which one, like tech and TAM, which one's 2 or 3. It's interchangeable from our perspective.
How do you actually assess the founders then if it's that early on? Is it previous success sometimes? How do you assess the founders?
You know, we've had a great success in backing first-time founders.
Okay.
All right. We've had a great success in finding operators like myself and my partners that say, you know what, I don't want to be an operator anymore. I want to go solve a problem that I was facing as an operator. Right. And then we've had great success backing people over and over again, as I just now said. Right. But probably half of our investments are probably first-time founders. It's harder to do that at like a seed stage. At the Series A, though, when they've kind of broken through, you know, it's a little bit easier. We'll do both for sure. But, you know, we really get to know people carefully. You look at the totality of the team, their ability to hire, you know, the originality of the idea. Is it a better mousetrap or is it changing the mousetrap entirely? You know what I mean? And then what's the likelihood that they can go execute on that? And so I can't tell. I think it's an art. It's not a science, basically. You know, Patrick likes, there's one thing that Patrick will say, and he's usually applying this to like a startup or technology, but I think it applies to the team as well. It was like Supreme Justice or something that said like, I can't define pornography, but I know it when I see it, you know? And I do think that whenever we're assessing a team or we're assessing an idea, you know, meeting a new company, whatever it is, like, we don't go into the meeting with a preconceived idea that you fit into this mold or you check these boxes. But when we see something inspiring, we know it. Yeah.
Let's get one of your companies plugged. Who was your most recent investment?
So our most recent investment we haven't announced yet.
Okay,
so
the one before that.
The one before that, by coincidence, is called Before.
Oh, really?
Before AI.
How funny.
Yeah. No, that's our most recent one's Before AI. Super fascinating company. It sounds like voodoo freaking magic, basically.
Yeah.
Because they are looking at changes on the internet every hour, looking at infrastructure that's being stood up on the internet. And they have a patent that allows them to do pre-crime. So think Minority Report with Tom Cruise, where you're predicting something's going to happen before it happens. They're predicting this infrastructure actually is being stood up to attack their customers. And then that's kind of like, okay, sure, maybe you're right, maybe you're wrong. But what's voodoo freaking magic about it is then they're integrated with 1,600 service providers around the world, including Amazon, Google, Microsoft, et cetera. And they're automatically taking that infrastructure down before the attack happens.
Brilliant. Yeah,
and they're doing it at scale. So like their largest customer they're working with is a very large social media company that I'm sure everyone uses every day. And they're doing 6,000 automated takedowns a day for this company, as an example.
Yeah,
it's
wow.
Fascinating. And what's fascinating is the service providers trust their data, they trust their predictions, and it actually works to the extent that Munich Re actually has a performance guarantee with them where if they make a prediction and you have an impact that negatively impacts your company, they will reimburse you up to 10 times your contract value in your expenses, basically, that you're out. So they never had to do that. We never had that problem, but that guarantee is even there. So there's like so many things about the company that are unbelievable, actually.
Brilliant.
Yeah.
What about in terms of spaces? Like obviously we've had the whole data, cloud, AppSec, and then I'm seeing obviously a lot of AI talk at the moment, but is there anything that's you're finding particularly interesting at the moment in terms of the space?
I mean, just covered a lot of territory, I suppose. We are constantly looking for something that can help improve data security. If you think about DLP as a technology, it's a 20-plus-year-old tech. So everyone's looking for DLP 2.0, and so far no one's found it, to the best of my knowledge, at least. It's definitely a very important area of interest for us, as your four physical and logical walls don't exist anymore. As things are obviously not within your control. It's natural that you want your controls to follow your data. But they tend to break down around third-party collaboration, around mobile or around user experience. There's the three things that have been failing for the last 15 years. Is the why we're not reinventing it. But we're constantly looking for that. Actually, I can't tell you how many dozens and dozens of companies that we've seen and gotten close to. When it comes to AI, it's fascinating. I have our investment thesis slide from our investor deck from the seed fund that we just raised last year. All right, there's 8 bullet points on it. 8 bullet points on it. The first 4 are word for word identical from our 2017 investor deck. All right, nothing's changed. All right, the way we interpret these 4 bullets are different, but as far as the investment thesis, is the same. And one of them is that we are investing in disruptive technologies around AI, ML, and advanced analytics. Mm-hmm. All right, it's exactly what it says. The difference is in 2017, I would tell you every single company we met that year, 500, whatever, will all talk about their AI, ML, or analytics, but there's no AI in security. That's what I would have said. There is ML and there's analytics, and less than 5% of the companies we meet does their ML or analytics make any difference whatsoever, right? Yeah. But they all claim to have it, right? Fast forward today. Every single company will talk about their AI, ML, and analytics. There's some forms of AI in security today. And I bet less than 20% of the companies we meet, though, does it really make a difference. So we went from less than 5 to less than 20, right? Yeah. It's a significant improvement, but we still got a lot of wood to chop ahead of us. I bet you, in the next 2 years, I'm going to say it's 50%, though. Yeah. Right? So we're starting to catch up with a lot of the marketing hype. Or with technology limitations we had in the past, those barriers are getting broken down. And whenever those things are realized, it can be massively disruptive. Mm.
Yeah. You mentioned 2017. Has there been any companies you've looked at or you've skipped and you thought, damn, I should have...
Oh, believe me, no. I mean, look, there are so many companies who are like, wow, I can't believe that we didn't invest in this company. That was a huge miss. Mm. For every one of those, there's 10 though we're like, thank God we didn't do that one. Yeah. So I just learned. I got this advice over a decade ago from my senior Blackstone partners and whatever. They're like, never regret the ones you missed. Yeah. Because the ones that you didn't do, you'll regret more if you did them. You know what I mean? Yeah, You don't want to end up with problem childs. That's for sure. Yeah, right. And so we have a very, very fortunate. Like our loss rate is extremely low, like way below the industry, single digit percentage. Wow. Over the last 12 years.
Yeah. In terms of advice, is there any advice you find yourself giving founders constantly, or is there any advice you think that you tell them a lot?
Yeah. Like, look, this is going to sound counterintuitive in a way, but like there's only so much that you can do so quickly. As a company. And sometimes we have founders that are just like really forward thinking. They want to go super fast, and you can only go as fast as your customer wants to go. And what we've seen and since COVID actually is things go slower. And I thought this was like COVID era, right? And like that this was going to change and it's going to pick back up at, kind of post COVID or whatever. And the new norm is like things just go slower, right? And so if let's say it's your first year of selling and you can do $1.5 million, let's say your first year, and you write a plan for $2.5 million, and you come in and you do 2, like it's hard to celebrate doing 2, because your plan was 2.5. But 1.5 would have been acceptable, right? And if you did 1.5 and you did 2, you could celebrate overperformance, right? So again, I'm not trying to say go slower, but like what we're finding is like the market sometimes dictates the pace at which you go. And if you try to push too fast, too hard, none of my CEOs are going to hear this podcast, I hope, because, but then you can sometimes not celebrate those wins. And so the times where I've seen over the last, 10, 12 years or more, where we got in trouble is when things are really, really hot and they're going well, but we get just a little too far over our skis. And then what happens is you put together a burn plan for 2.5, but you only do 2, and now you're overextended. Right. So I think just trying to be a little bit realistic with how fast the market's going to go. This AI craze that we're on right now, everyone thinks it's happening today. It's not. It's happening over the next 3 to 5 years. Maybe over the next 2 to 4 years. So you're a year or so into it. But I think just being realistic and honest with ourselves sometimes, it's easy to get super excited and try to go too fast. And that's where I've seen great companies trip up more than anything.
Interesting. It's been an interesting couple of years in terms of VC dollars, and I think 22, 23 was where it sort of died a bit, and then now we're definitely seeing an uptick, and sort of the economic cycle seems to be on the up. What do you think, sort of, as where we stand right now, and then the sort of future? What do you think over the next couple of years we're going to see?
Look, I do think as crazy as like this bubble was maybe in 2021 and 2020, 2021, whatever, and even now as it looks like things are going up and up, my personal view is a decade from now, we're going to look back and we're going to say, this was early days still, right? Because if you just think about it, like Moore's law kicking in and things just exponentially kind of increase, our dependency on technology is only getting greater. If you think about where we were at 10 years ago, 20 years ago, how long it took us to get here, I don't think it's going to take 10 or 20 years to get that much further, advanced. And if we just look at some of the things that are happening in the world today, I mean, like technology is everything we're dependent on. If technology fails or we have a problem, it completely impacts our lives in ways that we probably never thought about even 5 or 10 years ago. I think that is just exponentially going to get greater. As that gets greater, that creates more holes for adversaries to go target, more opportunities for adversaries to go target, however you want to think about it. And I think it creates a greater need for cybersecurity. So I think that we're in an industry right now that unfortunately, or fortunately, depending how you want to look at it, right, it is in great demand because the upside for the adversary, whether it's economic or non-economic, it doesn't matter depending on who they are, is so significant and it's only going to get greater.
What's the future for SYN Ventures then, man?
Look, I mean, one of the things that we're doing is we're sticking true to what we do. We're focusing on early. We're not going to raise an opportunity fund. We're not going to do later stage. We save that for folks to do a really good job. There are our LPs that like that co-invest. We launched our Series A fund, a few years ago. Last year we launched our seed fund. So some people are like, oh, you went backwards. It's like, no, we're helping entrepreneurs get started earlier is what we're doing. And we're going to stick to that, and so we're going to stick to this 100 million, 300 million, 100 million, 300 million between our seed and our Series A. And I think that drives good behaviors on our part from an investment thesis. It allows you to be able to celebrate early wins if you have early exits, because you have $1 billion fund and something kind of sells early, but it's a good outcome. It's not big enough to move the fund. And so we want to make sure that we can celebrate the $1 billion exits and we can celebrate the $100 million exits depending on, the stage. And we're going to continue to have fun what we're doing and partner with great people. And, we have a no asshole policy. It's, no assholes in the team, no assholes that we invest with, and no assholes we invest in, you know what I mean? And so we'll stick tried and true to that philosophy. And, we just, life's too short, so have fun in what we're doing.
Yeah, I love it. Well, I love that policy, and I wish you guys the best of success for the future, man.
Awesome. Thank you so much.
Appreciate that.
Appreciate it.